Hi, everybody. Welcome back to another edition of VCTV with your host, Kyle Ellicott. Today, we are going to be speaking about early stage venture capital and seed investments and where investors are placing capital from an industry and opportunity perspective as well. And I'm joined by some outstanding friends of the VCTV family who are investors investing in many different industries and categories and around the world, as we're going to speak about, to share their thoughts and insights with all of you today as well. But before we get started, big thank you to the Token team, to Hasbik and for Maria for making today's episode possible. With that, again, I'm your host, Kyle Ellicott. Let's go ahead and introduce today's guest, Vandana. Welcome to the show. A little intro and background for everybody.
Yeah, hi Kyle, and hi to everybody watching this show. Thank you to Latokan VCTV. Thank you to everybody for having me here. I was in Singapore and Jakarta for 15 years in investment banking. I had my own family office fund there. This is my 7th year back in India. I did investments, then I went back to advisory. Currently, I'm connected with 300 investors globally. We pick up global deals. We are sector agnostic. Typically, we do a $1 million to $25 million. We are sector agnostic. I've given 160 talks all over the world. Apart from this, I'm selected as the top 10 women leaders in wealth management 2021. And my brand Convanto comes under the top 10 women entrepreneur brands. Besides this, I'm also an advisor in Loyal VC, the INSEAD-led Canadian VC fund, with a core portfolio of 160 investments in 35 countries. And I'm also a partner with GST Venture Studios, a Silicon Valley-based venture builder. That's all from me now.
Wonderful. Welcome. And Tobias, welcome back as well. A little intro and a little background, please.
Absolutely. Thanks so much for having me. Always a pleasure being on the show and talk about all these exciting topics. A little background. I started off on the investment side as an investment banker, and then went into the operator side. I helped scale companies in a bunch of different regions, predominantly Asia and China. And now based out of Singapore, so it's a late night here for us. With Blockchain Founders Fund as a principal, we have done 58 investments in the early stage blockchain and emerging tech space. And we're in the process of raising a fund. There's a $75 million early stage fund, and we're going to make 200 more investments over the next 4 years in the early stage space. And always happy to talk to founders and sort of help them scale through the challenges very early on with, of course, capital, but also smart capital in a sense to really help them scale and achieve their milestones faster than they would without help from a VC and from strategic advisors.
Wonderful. It's exciting to have both of you here today. And Tobias, I want to come to you first and just jump right into the topic that you focus on so much, blockchain. Earlier today, I rattled off about 10 different companies who have announced fundraising, and half of those were all in the early stage categories, ranging from NFTs to gaming to DAOs and the like. What are you seeing at Blockchain Founders Fund on the early stage as interesting trends and rising opportunities that others should know about, again, at this early stage?
Yeah, it's a very interesting question. And I feel like actually what I talked about today with some people from my team, it's still interesting that, especially in the blockchain space, of course, there are a lot of different VCs, a lot of different investors, and a lot of different projects. But it's still difficult to find early stage investors in the space, right? Because companies and projects, they scale very, very fast. And we have seen with the likes of Axie Infinity and other fast growing blockchain companies, they raised $1 million on a subsequent round. So for a lot of big funds, it obviously makes sense to come in later from a Series A perspective or even onwards in a Series B to deploy $400+ million funds in the space, right? And you will always sort of find projects you can invest in because they're fast growing and they're adopting. But in the super early stage space where we are operating in, which is typically between sort of the pre-seed to pre-Series A, where you don't really have that much competition as an investor, right? I mean, of course, there are some players, but it's still surprising that if you start backing super early companies, like literally pre-revenue, pre-product, or even pre-product market fit in a sense, that you kind of don't really have that many co-investors coming into rounds because they all want to see traction, of course. And the beauty about backing these early stage companies is that you will end up, sort of really help them scale and have favorable valuations from an investor perspective, but also can follow on and really help drive the whole investment process. What is interesting right now, what we do see a lot, is of course in the gaming space. I mean, the Splinterlands, which is an our portfolio company, for example, or Axie Infinity. Now, a lot of gaming companies which sort of utilize the play to earn principles are popping up from literally everywhere in the world. And we do have a lot of NFT marketplaces, so we see a lot coming to our way now. Although it's difficult to find the right differentiation in these areas. So typically for us, it's just very, very important to focus on if they're actually solving a problem, right? Because there's so many different crypto companies popping out from everywhere and trying to solve different problems. But especially in the DeFi space, it's always hard to figure out, okay, are they actually solving a problem, or are they just like facilitating something? And we are a long-term sort of investor who likes to follow on in different rounds. So we typically look at this, but yeah, in the gaming space, of course, a lot of stuff is happening right now. In the infrastructure space, we see a lot of payment companies, exchanges coming up, and then of course in the NFT space, in fan engagement, which kind of pops into gaming as well, but also on the marketplace side, a lot of companies are growing and growing fast, and it's hard sometimes as an investor to really differentiate them and see how they build communities and how we can engage and how we can help them, and if they really solve a long-term problem. And even in the bear market or in a down market, that they would still sustain that because users like what they do and they feel like they're actually bringing value to the table in a sense.
And with those early stage companies, do you have a framework that you go through and evaluate those companies at such an early stage to see what that potential could be later on as an investor? I mean, investing in these companies at such an early stage, right? It is kind of unknown as to where things are going to go. And you're bringing up a great point as decentralized finance or DeFi. There's a lot of use cases, but there's also a lot of not use cases yet that we have to grow into. So how are you as investors evaluating those companies at such an early stage?
Yeah, I think it's again a very interesting question. And of course, you have to be a bit more creative, right? Because typically you don't have a financial track record, right? It's always easier to ask for traction it's always easier to ask for validation in terms of the product, in terms of user base. But if you're very early on, you don't have all of this, right? So you're kind of left in the dark to that regard. I need to figure out different ways of sort of validate if that company would be successful or not, right? Or if that even is a problem. So what we typically look at, of course, as a very big priority to us is the founder profile. Do we really believe in the founder? Do we also like them? Because in the end, as a VC supporting a company from a capital perspective, it's typically a very long relationship. And you want to follow on. Fund life has probably like 8 to 10 years. And if you back them early on, it takes also 2, 4, 5 years until you see returns or offers or just like things which makes a transaction attractive. So the founder profile, do they have the necessary domain expertise in that specific sector, which could be NFT? Then you probably need someone who understands the crypto space. But if it's a marketplace, you also would need to understand someone who is more in the business on the economic side, who probably worked before for a similar company or had a startup before, maybe even have an exit, which kind of proves that the founders are in for the long term, but also have the necessary expertise to help scale the business. And of course, we as a fund, we to like them. On the other side, it's very important for us to figure out, okay, we talk to experts on our side. So we have this expert network. It's 250 people in there. And we're very excited to have all of them. And they support us. We have corporate partners who support us. We have incredible people on our team as well who figure out, do market research, do studies, if that is actually currently a pain point, or if that could be a pain point, right? Because it's always also a challenge if you only ask if it's a pain point right now, because probably most of the people, if it's a too innovative idea, they wouldn't even know that they're missing something in that regard, right? It's the same thing if you would have asked people before Amazon if they're missing Amazon, they probably would have said no, right? Because buying books or buying any sort of product in a shop does make sense. And the same is here in that space. You need to be a bit more creative. You need to look a bit sort of in the future, look what trends are currently there and how that would sort of fit in, and what problem and what sort of industry or category could the company redefine with the current sort of vision or perspective they have.
Thank you, Tobias. Vandana, to you, do you have a similar framework, or how are you looking at evaluating companies at such an early stage in some of these new industries that are rising and seeing a ton of capital, millions to hundreds of millions, and in some cases billions of dollars very quickly?
Typically what we do is when a company comes to us, we have our own practices of due diligence on the company that we take place. Then we, ask a few fund friends of ours whether this is doable or no. When we see a first level of interest from there, that is when we take up the case. But we do look at the founder's background. We do look at what technology they are bringing on the table. We also look at other factors, like if they have some sort of revenue, at least that they can show, so we can take up the case. Because at many stages, Kyle, what happens is that companies have several, they are at idea stage. And they think that they are able to bring up their idea, but at times it's not doable, and we suggest them to pivot it. So, the typically trends that we are looking at are now fintech, health tech, agri-tech, ed tech, AI, robotics, IoT, and these are biopharma. These are some of the industries we are looking at closely.
And why those industries? Is there anything in particular, and with your focus on Southeast Asia and in greater global perspective as well? Any reason for those types of industries, and maybe a little bit of what you're seeing even at GSDV? Again, GSD Venture Studios, for those who may not be familiar.
Yeah. What happens is investors all over the world have a herd mentality. So typically what is happening is if a tech deal is getting investments, all the investors start investing in the similar type of deals. You must have heard about Zomato, which went to IPO level, but it was a loss-making company. And post that, lot of IPOs started happening with loss-making companies because one person took the stand of putting money in something different. Now, what happens is when investors see that somebody is putting money in fintech, then all other investors start following that. So, tech deals typically happen very fast, and there's a lot of interest which I see from the investors coming in this direction. In the tech direction, I mean, and other industries where I see there is no interest, we typically refuse them or don't pick up because our investors are not interested in those. So for me, I like all types of companies, even if it's non-tech, if it is a consumer brand, if it is e-commerce, I would like to look into each and everything. But because the set of investors that we have, they look into more tech deals and they are more interested in these sectors. So we pick these sectors specifically.
Makes perfect sense. And then in terms of closing thoughts today, would love to hear your advice, both of you, for those companies out there raising their first or second rounds. And this is a very important time right now for that, because we have a lot of capital that's available, right? From angels to syndicates to venture funds and programs and accelerators, incubators everywhere. So there's more opportunities to get capital, but also in some of these markets, Tobias, you mentioned blockchain, we're seeing billions of dollars of new funds being created and a lot of money being pushed to companies, valuations being pushed up, all of that rising. So for each of you, what advice do you have for entrepreneurs going to raise their first few rounds? And then, of course, where can they reach out to you to connect to learn more as well? Vandana, let's start with you first. Advice to those founders preparing for those first or second rounds, and then where can they find you to connect afterwards?
Yeah, definitely. Primarily, one expects to have a strong team of individuals with a large skill set. At an early stage, mostly investors like to invest in the right people over the right product or service. Of course, it's a plus if they already have a product which is doing well in the market, and if they've figured out the product market fit, and if they already have a minimum viable product. Another thing to look at how we as investors can add value to the company is for the best investment in terms of amount and investor relations, founders and entrepreneurs need to research the investor market and find an investor that is active for their sector it works in. Typically, what happens is founders are reaching out to the wrong set of investors, not looking up their thesis, not having a look at their website properly and understanding what exactly does the investor invest in. And one of the most important parts of impressing the potential investor is the pitch. They need to have a well researched pitch deck. It should be precise with all necessary data that the investor would want to know. The pitch should include all projected data and justifications for those projections. It is very, very important to have a video pitch deck as well, because that is what is trending in the market these days. Apart from this, if they have a CFO on board, an advisor on board, proper investment banker who can take them to the right kind of investors, a complementary team, that will really do wonders for them. I could be reached out on my LinkedIn handle or my website, www.convanto.com. And once again, thank you for having me here.
Thank you very much, Vandana. Tobias, to you as well, that advice for those first-time founders, specifically maybe in the blockchain industry, as we're seeing a ton of capital move aggressively in that, and then where can they find you in the fund to continue the conversation?
Absolutely. Yeah, thanks also, Vandana, for sharing all these very interesting points. I agree with all of them. Just a couple of more specific on sort of our industry and what we are looking at. I feel like, and I've been on the operator side and been raising capital. I think it's always very important to start early with the fundraising, right? I mean, what I mean is, if you're trying to close your round, let's say in December, you don't want to start in November and then being sort of in a rush and don't really have that leverage or that thoughtfulness throughout the process. So building these relationships with investors at times when you even not start fundraising is in my opinion very, very crucial, because it helps everyone understanding where the company is heading and progressing, and it keeps building these relationships. And then as a founder, I think, because right now capital, especially in the blockchain space, is very easy to access, I think it's important to find the right investors who support your vision and who support what you're doing, and also to understand what does the fund or that specific party who wants to give you capital expects from you, right? It's a very big fund. You also need to understand fund economics from a founder's perspective. We need to understand, okay, what is the fund expecting from a company to make X, Y return in order to pay back the fund? So that's why it's important to have the right mix of smart capital and capital to fill up around, so people can also help you more on a strategic perspective, business development perspective, making the right introductions and bring the right people in to build that ecosystem. And that obviously takes time and that takes effort. But it is important to start early and build these relationships, because you also want to have successful founders typically have funds which follow on and build their relationships throughout their growth. And I think that's just like the most, in my opinion, the most sustainable way of raising without having to raising bridge rounds in between, because there's some capital shortage and the fundraise is going to take longer. And even if some sort of down round is coming, pandemic was an interesting picture, and some metrics will go down. If the investors sort of understand your company through a longer process, they will understand that the key metrics are still solid and might not be shaken completely by such an event. But that's like my main point of this topic. And in blockchain especially, there's a lot of capital in the market, but there's not as much smart capital in the market. And especially just need to be a bit careful what kind of money you want to put in your company. But definitely, if you build something interesting, reach out to Blockchain Founders Fund. You can find me on LinkedIn, just using Tobias Bauer as my name, or my email, which is toby@blockchain.com, or of course on the website of Blockchain Founders Fund as well. Always happy to have a look, give advice if there's anything we can do, or supporting cool projects in the blockchain space. Very happy to get engaged and support. And yeah, thanks for having me. It was exciting to be on the show tonight.
Wonderful. Thank you very much, Tobias and Vandana. And also thank you, all those that tuned in. If you like what you heard today, make sure you click like, share, and subscribe on today's episode. And please do reach out to Vandana, Tobias, and myself. We'd all love to hear from you as investors. But remember to add context, where you heard us, where you met us, and what you would like to continue the conversation about as well. Big thank you to the Token team, to Hasmik and Maria for making today's episode possible. With that, everyone have a wonderful day, and we'll see you back here tomorrow for more VC TV. Take care, everybody.